will shed light on the emerging trends. Moderating today's panel is Ms. Grace Kibuthu Ogola, Operations Officer for Capital Markets at the IFC. Ms. Ogola, thank you for guiding this session. Our panelists are Mr. Leonard Mathu, CEO of AIS Capital, Mr. David Wainaina, CEO of Nairobi Securities Exchange, and Mr. Mikhail Habte, CEO of Ethiopian Securities Exchange. Please help me welcome Ms. Grace to the stage. Thank you.
Good afternoon, everybody. I hope you enjoyed your lunch and are ready for this session. We'll try and make it active and interactive so we don't have after lunch snooze as we have the session. I think there's been quite some discussion so far this morning, very interesting. And I think as we've heard from previous speakers, capital markets in Ethiopia have the potential to support financing of priority activities in vital development sectors. And I think we've seen that there are opportunities to explore this in infrastructure, housing, agribusiness, small and medium enterprises, climate mitigation, and adaptation. So we want to delve deeper into what these opportunities are for issuers and for investors. And I think as Saron has mentioned, we have a distinguished panel. So I'm going to invite Mr. David Wainaina to start us off. David has been involved in developing capital markets in Kenya and in East Africa. And we'd like him to share with us, what he's observed as opportunity trends for issuers. And David, I see you were promoted today by Saron. You can tell us more about your role as well. Thank you.
Thank you very much, Grace. It's always good to be in Addis. My name is David Wainaina, the Chief Operating Officer of the best performing exchange in dollar returns in Africa. That is the Nairobi Securities Exchange. We are very, very happy that as Ethiopia, you are where we are because the potential of this country is enormous. And I usually say that you have one great asset that you cannot borrow from anywhere, and that is your population. Our market is around 23 billion USD in a population of about 50 million people. So based on the population that you have of 120 people, we believe that the Ethiopian Securities Exchange will be one of the best performing markets in Africa. So we look forward to support you. To the question that Grace has asked me, what are the trends that we see from an issuer's perspective? Let me say three things. That one, the capital markets is an ecosystem. And this ecosystem puts together, one, the issuers, number two, the ecosystem, and these are the advisors. And number three, please, don't forget about the investors. The reason why we are seated here trying to structure the capital markets is for the sole benefit, not of issuers, but our client here is the investor. But the investor must be able to invest in good issuers, and they are going to be supported by the ecosystem. Before I give you the trends, when we hear that there is a function in Ethiopia, I have told you we are the best performing. We usually come a number of us. So please, my friends from the ecosystem who are here from Kenya, do you want to be upstanding so that Ethiopia knows that they must fire this market very fast because we are around? My good friends from Kenya, if you're here, they also enjoy their lunch. Yes, you can see a number of us. And I'm sure we will be interacting with them as we move along. So with regard to the trends, ladies and gentlemen, we are very, very happy because we know the Ethiopian financial system, especially from where you banks, insurance companies, and SMEs sit in, it is a very, very, very big constituency. So the emerging trends we see as your capital markets comes up is that, number one, you are going to have an avenue where you can be able to come for patient capital. I am sure most of the people in the room are probably commercial banks who are used to one source of deposits, and that is from your customers, where your customers come and make deposits and then those deposits are the ones that you structure to be able to put out products. Now, when these capital markets comes, you will have a trend whereby you will have another avenue where you have a cheap source of capital that you can go in, list by way of probably introduction or an IPO, and we are aware around here the IPO is a big word. There will be also issuance of corporate bonds. And the reason why you do that is on two things. One, it will help you, number one, as a company to know your value. I am sure most of you here have a name within your banks that you call a par value. Now, when the capital market comes in, and I am happy to see the regulators in here, you will have an opportunity to value your company. And the value you value your company that you'll be supported by the advisors, when you take it to the Securities Exchange, then the investors will start buying on those securities so that at the end of the day, one, they are saving through your company. Number two, even the existing investors have an opportunity to exit. I have walked through Ethiopia and some of the companies here, and I have seen there is a small registry function within your finance sections. Now, we want you to transition those small registry functions. You go to the depository at ECMA, you go to the exchange and trade those shares so that instead of having a 10,000 par value, probably your value should be much higher. So that is an opportunity that we see that is going to come with issuers in Ethiopia. Two, please, when this capital market comes in, I want to tell you that now you will be moving across the borders. Your company will be larger than the borders of Ethiopia. And that is why, as an emerging trend, we expect that there will be cross-listings where a company is listed at the Ethiopia Securities Exchange and also the company. And I want to plead with you, please list in the best performing market in Africa. Cross-list in ESX and also cross-list in Nairobi so that your investors can get more value from your company. Finally, technology as an emerging trend will be extremely important to the issuers. When you start issuing your shares, the time when we used to have physical forms are long gone. Please ensure that as you come to market, you have invested heavily on technology because the products that you put forward as an issuer, they have to be digital driven. Ethiopia is a very large landscape. So I have been telling the people who come to the best performing exchange that in your capital market strategy, please, where you have expansion as branches as one of your strategy, please think digital. Because the future of Ethiopia, the future of any issuer is around your digital strategy. So the expectation here is that you will be able to come up with a capital market strategy that will be heavy on digital. We are very, very excited that what the ECMA and the Securities Exchange has put forward, they are very, very, very agile rules that should be able to support any issuer to come to the market for the sole purpose of your investors. Finally, the trend we see is whereby the original founders of the company want to exit. They exit through the capital markets that is being put here. So if, as a regional founder of a bank or a company, you want to realize your value, please ensure in the next board meeting in your strategy, you have a strategy to go to the stock exchange so that you can realize your value. So the trends are many, and we look forward to continuously engaging with yourselves as we position this exchange as the largest within Africa to compete with us. We like competition. Thank you.
Thank you, David. I think you have made some interesting remarks, some controversial. I'd like to see some rebuttals maybe at the question and answer time, but happy for that introduction. Thank you so much. I'd like to invite Mr. Leonard Mathu to give a perspective on the trends for investors. And Leonard has been involved in structuring capital market transactions across the region. And more recently, last week we had the first green bond listed in Rwanda by an infrastructure company, and Leonard was a big part of that process, including others in the housing space as well. So Leonard, you're welcome to share with us.
Thank you, Grace. Good afternoon. I'm very pleased to be in Ethiopia again and happy to be here during this summit. And as part of the ecosystem that do support issuers come to market, I'm very proud to start having conversations with potential investors, potential issuers about participating in this market. So I'll go through some 5 key trends, maybe 6, that we see with investors. And I'm going to limit this to the region, and region is mostly the wider Eastern Africa. And I can pick examples also outside Africa. And for example, for the first one, the key trend is a big desire to achieve real returns. And real returns is inflation beating returns. And some of our largest economies in Africa have been battling high inflation. That includes Ethiopia and Nigeria, for example. And the conversations with investors there are, where do I put my money where I'm able to earn above inflation returns? So all the results and indications we are seeing from Ethiopia, the fruits of macroeconomic reform are starting to be evident. I think inflation is being tamed. So if investors looking into this market, obviously they are not looking for short-term investments, then the outlook is that this is achievable. So that's something that investors will want, especially investors that are institutional-based, who the biggest group in this category is pension funds, which have to make sure that they are giving the savers, which is workers, the real return for their money. So you don't want to retire and then get a return that you can't be able to afford your basic necessities. Then there is, the second one is then beyond the yield, there's a desire for impact. So not only do they want to make money and the real returns, but they are looking for investments that will yield more than financial returns. And they are seeking them out very actively. So if you look at the recent bonds in the region, the green bond that Grace talked about, there have been 2 sustainability-linked bonds in Rwanda. There has been a bond, gender bonds, sustainability bonds in Tanzania. So we see investors are looking for investments that will do good. And Ethiopia provides that opportunity. And so potential issuers, when you come to market, also think about what else you can offer other than the yield. There is, the third one is diversification. There is a huge need to diversify investments. So most of the regional investors and even international Africa-focused investors have been holding maybe mostly government-backed government instruments, could be treasury bonds of different formats. And there's a desire to seek out big corporates. So that's an opportunity for Ethiopia to offer to the market. But also, I would say that investing in Ethiopia in itself will be a diversification strategy, because it's been missing in terms of when you look at the investors, where they invest across the continent. This opportunity did not exist. There has been a lot of talk about local investors. So regional investors want to see local investors leading the way. So here there is that emphasis of retail investors, which is good. But the big regional investors would like to have a conversation or sounding off with local institutional investors, your pension funds, insurance companies, because if a deal comes to market, they want to know the thoughts of the local investors. Irrespective of what the prospectus will say, they want to hear that it's been considered by local investors. And this is across the world, this is how it happens. If you look at Kenya, most of the deals, the pension funds lead. In Rwanda, RSSB, which is the local pension fund, has been leading on these deals. The Tanga bond, which is a very unique bond, it was a money bond by a first-time issuer, and for international investors to get comfort, they had to have that engagement with the Tanzanian local pension fund, just to understand the level of risk and how they are viewing it. So there is a big role for the local pension fund industry and the insurance and other institutional investors who will develop in this market to lead the way. The other trend is that the size of transaction matters. For big investors, because of how they view their allocation, as you know, because of prudent investment practice, most of these investors won't take 100% of whatever comes to market. So they have certain guidelines that they can only take maybe 50% or 20%. And the effort to conduct due diligence, come to the market, understand the transaction, they want to have an expectation that they will deploy significant capital. And this is very common with the big DFIs that would want to invest in these markets. Now, this is a big opportunity for Ethiopia. So when I've been going around and I've been looking at potential issuers, I see potential to come to market at a scale that you don't find in Rwanda or Tanzania or Kenya. So you have that opportunity because the companies are slightly bigger, and that presents a very unique opportunity for this market. The last one is, and has been mentioned, is that there is need for investors are asking for credit enhancements, or others are saying if there's no credit enhancements, is the issue rated? So is there an independent review? Yeah, because if your advisors, remember, are working for the client, so not very independent, they are selling the transaction. So a question was asked about credit rating agencies that would be interesting for investors, but also some form of credit enhancements. It could be guarantees, it could be something else. And there are institutions that are actually offering this. Yeah? So there are specialized guarantee vehicles. Akin, in an earlier panel, mentioned the Mana. There's InfraCredit, that's Nigeria, it's a good example. But there are also other multilateral and bilateral-based guarantee agencies that will be looking to support transactions here. So those are a few key trends. I would say that most of them present an opportunity for issuers in this market, and also for investors, local investors, because then it tells you that for transactions you'll be able to have experienced co-investors coming from the region to co-invest with you in these transactions. Thank you very much.
Thank you very much, Leonard. I'd like to invite Mr. Michael Habte, the Chief Operating Officer from Ethiopian Securities Exchange, to join us on stage as we have a brief conversation around the trends and what that means for Ethiopia. And then we'll open it up to some questions from the audience. I think as Michael settles, we'll leave him to settle down a bit, and I'll ask David. So you've shared, very elaborately what the trends are. So how can issuers here in Ethiopia take advantage of these opportunities to diversify their funding sources? So there's what we are seeing elsewhere, but as you have interacted a bit here, and also how the other markets have evolved, where should they start? How should they take advantage of these opportunities?
Thank you. Thank you very much, Grace. So for the issuers to take advantage of this opportunity, first, they need to entrench the capital markets as part of their strategy. The capital markets by itself is not a project. It is an enabler to your strategic plan. So the expectation is that potential issuers must be very, very deliberate and come up with a strategy that is having the capital markets as an enabler, especially from a funding proposition, because all strategies must be funded. Having said that, then, the expectation is that issuers need to be deliberate and engage in technical support, so that two things are going to happen. One, any issuer that is coming up to or is looking towards taking advantage of the capital markets must know how are they fit for the capital markets? Because the capital markets is sort of regulated corridor. It is not sort of, but indeed is, with very, very clear requirements as to what boxes do you need to tick so that you are listed at the Ethiopia Securities Exchange. So the first thing is that issuers need to do that. Get that technical support, know the value of your company, know where you stand on a scale of 1 to 10 with regard to the requirements. Once you do that, you will be advised as to the avenues within which you can land into the stock exchange. And there are 3 avenues that you can land, Grace, into the stock exchange. One, the issuer, once they are reviewed around their status, they could get advice that they need to go to the securities or to the capital markets by way of an initial public offer, IPO. The second route, this is where the issuer wants to raise funds. Then you value yourselves and go to the public and raise money by way of an initial public offer. The second route is whereby you don't want to raise money for now, but you want to become a public company because from where DG Hannah sits, there could be, benefits of you being listed. So the second avenue that is quicker and faster, where you are not raising funds, is for you to list by way of introduction, whereby I know most of the potential issuers may currently be having existing shareholders. So it's a very, very simple process where you just take those existing shareholders to the stock exchange by way of introduction. That path has been provided by your ECMA and is a very, very simple route for you to land into the market. Number 3, and most importantly, the trends we have seen as markets emerge is that there is a whole section of corporate bond segment where issuers can be able to take advantage and access capital or funding by way of issuing a corporate bond. So a bank can decide that they will go to the Securities Exchange. The thing that they will be done is what Leonard was saying here, is that the bank will be rated and you are able to put out a corporate bond out there. One of the trends we have seen is that corporate bonds or the debt through the capital markets actually is a cheaper way for issuers to be able to support their strategies, because if we compete, as a matter of fact, capital markets and the financial ecosystem, including banks, they do not compete, they collaborate. So that if you are a bank, you can actually be able to go and issue a corporate bond for the sole purpose of generating cheaper capital. 1, to finance your strategy, and number 2, to on-lend. So it's supporting your core function. So those are the avenues, Grace, that we foresee. And the expectation in Ethiopia is that one of the things that we are very, very happy about is that the rules and the provisions that have been put by the ECMA, because they have interacted with us very, very closely, they are very, very clear in terms of what you need to do, when you need to do. So the expectation is that for the 3 options, please just ensure you pick one, because you must.
Thank you, David. Michael, David has mentioned about the existing pool of retail investors, and I think this is a unique feature where we're starting a capital market where you already have retail investors that have invested directly in some companies and some firms. As we think about these opportunities, what do you see as a benefit of these existing investors and also new ones that will come into the market to participate in this new market, in contrast to staying in the current state of direct investment outside of a market? Thanks.
Thank you, Grace. It's a very good question. I think this morning it was mentioned a couple of times, the amount of direct investors in our country. So there's maybe a misunderstanding that there's no existing capital market, but I think a better way to put it is there's no existing regulated capital market. I think DG Hanna said earlier, almost 400, 500,000 shareholders exist. And this is just amongst the banks, insurance, basically financial sector. There's not much data on the rest. So when we call existing shareholders, as you said, This offers the first opportunity, number one, to operate in a regulated environment where the issuance, the primary market itself is regulated. You know what you are buying. At least you have a better idea. The regulator will enforce rules around public offers going forward. So on the existing investor side, maybe more tangibly, buying and selling shares will be a lot easier. Even for a bank today, it could take a week to a month to transact a share that you've been holding. And it's valued at par, like David said earlier. It's not really valued at a proper market value. So there's a lot of unrealized, I think, gains to be made just for existing shareholders. This is not even adding anyone else into the pie. So that's, I think, for the existing shareholders, getting capital gains, realizing gains with the shares they have, easily transacting in and out will be much easier. We'll have an easier facility through the exchange, through the mobile applications that will come on board. So that's just on the existing side. For new investors also, some of the benefits will be this. Some of them will be the same. You will know what you're investing in. You can easily transact. The pricing will be more transparent. It's not just something made up. And most importantly, transaction costs will come down a lot. So in our current unregulated market, we mentioned this in a lot of workshops, seminars. It can be up to 10% just to buy and sell a share. You have to meet in person with that individual to buy. So imagine if you're not in Addis Ababa, if you are located in a different part of the country, or if you're a diaspora, how hard it is to just sell a share that you already own. So over time, this will be much easier, and it will actually entice more people to invest. I think we'll see this with Tele now. The numbers will probably shock a lot of people, I think, the amount of initial investors. So many benefits. You'll have a more regulated market, a better framework, and obviously technology systems will be on par, I think, that you can find anywhere for the most part.
Thank you very much, Michael. Leonard, I think as we look at this existing pool of investors, which is already a large pool, and institutional ones that we've been talking about this morning, pension funds, insurance companies as well. What investment options then, should we expect to be available to them as, the market comes on stream? And this is really based on what we've observed in other emerging markets, just so that as we look at bringing them into this regulated space, there's also a sense of awareness of what their options are, what are these opportunities that they can now take advantage of.
Thanks, Grace. So if you look at how markets have developed, and that takes, different time periods. You do start mostly with the government markets, yeah? And that's the initial opportunity that's available for investors, which is, I think it provides stable returns. Everyone knows the government, it's local currency, everyone understands, the policy around central bank, the monetary policy. And also, what people say, if it's local currency, the government can always print money, so I won't lose my money. So that's the first. And then you move to sub-sovereigns, and this would be SOEs. So what we've had this morning about, from the panels, about looking at SOE reforms, there would be opportunity, whether it's on the debt side and equity side. That's the next opportunity set for investors. And SOEs tend to come to market with fairly conventional instruments, which would be mostly longer-term debt, because they are responsible for example, critical infrastructure where they need long-term capital. So that then matches, the investors with long-term financing, for example, the pension funds or the insurance industry. Then shortly, or following next to that will be the corporate. It doesn't have to be in that order, but that's how you see markets develop. And corporates is where now they get very creative. They can start with your normal equity debt instruments, fairly defined. And then you could either get into these thematic issuances. We talked about sustainability bonds or green bonds. So there would be, and we expect that to happen in this market. In this morning, we had about leapfrogging. You don't have to wait because investors are already demanding these instruments. So we are excited because we think that the market will have an array of instruments and investment options for investors, both local investors, regional investors, and international investors. Yeah.
Thank you, Leonard. I think we want to segue into questions shortly, but before we do that, so as you prepare your questions, I'd like to just get your perspective, David, in terms of just overall now as we look at developing this market, what strategic plans should the authorities, the private sector, the exchange, and the others consider for developing capital markets so that they will better serve issuers and investors? And I think you mentioned some of those, but maybe you can just in terms of a strategic point of view. Thank you.
Yeah, so thank you, Grace. So as we fire up this market, one of the things that will be extremely critical strategically, and authorities must be deliberate about it, is capacity building awareness. So the expectation is that this ecosystem must put together a very, very good investor awareness strategy that will be led by all the players, especially from where ECMA sits, from where the exchange sits, from where the ecosystem sits. We must be able to have an investor awareness strategy, because the capital markets is an awareness game so that our investors are able to know what we are putting together. That's one. Two, the expectation is that also strategically, once the capital markets emerge, we will see some structural changes, especially from a pension perspective, because the capital markets works very, very closely, one, with the pension sector, two, with the banking sector, and three, with the SME sector, because they all come to the capital markets for this cheap and patient capital. So strategically, the expectation is that we will see in Ethiopia these key sectors starting to, emerge if they are not there. And if they are there, we will see very, very deliberate policy interventions, because once the capital market is in place, they must follow, and that is the trend that must happen. But I want to be very, very clear that based on the very great work that has been done, the next thing that we must focus on is indeed investor awareness and ensuring that there is an ecosystem, especially from an advisory perspective, because the way the capital markets works is a three-pronged approach. One, you have to train. Number two, you have to advise, so that the issuers are able to be very, very clear of what products they bring to market, and the investors are also aware. So investor awareness, so that I know the people and the ecosystem in the room may have some fear of what is this thing that is coming up. The only way we can be able to shed that fear is investor education. But I also want to advise that please fear, because capital markets is a good thing.
Thank you, David. There's something that you said earlier at the beginning when you were talking about the trends, that the most important here is the investor. I want to ask Leonard to kind of give the other perspective, because I think issuers are very important. Without the issuers, then you will not have investors. So as we look forward, how can Ethiopia practically leverage capital markets for growth in priority sectors? And this is, I think, where the value of the issuers and their link to priority sectors and the effect on the economy is important.
Yeah, thank you. So as I had mentioned earlier, that investors will view transactions coming out of this market from a both yield and impact perspective. And this is a growing economy, one of the fastest growing. And so investors want to be part of that story. And there are certain sectors that have been driving this economy and that are in need of financing. If I think about, for example, the agri-value chains, the agro-based manufacturing, and all these need expansion capital. And so investors will be looking out for credible issuances coming out of these sectors. Yeah? And it could be both private sector, it could be quasi-public, it could be your regional governments coming in to issue money bond structures. So, and just also not to discourage the small SMEs. I know the capital markets is also an avenue for SMEs to come. Yes, they are a bit smaller. So there is precedence of mechanisms like pooling of SMEs to come together and issue instruments in the market that would be very attractive, because then that is really funding directly. And it's what most investors you'd hear say, they want real economy exposure. They don't want to maybe go through the banks. They want to deal with the real economy. And this can only be effectively done through the capital markets. And that's a great opportunity for this country.
Thank you, Leonard. So, Michael, as we wrap up, there are initiatives that I believe the Ethiopian Securities Exchange, the Ethiopian Capital Markets Authority are working on to encourage companies in priority sectors to come to market on one hand, and on the other hand, to build trust and enhance protections for investors. So perhaps you can just share, I know some were mentioned earlier, but maybe specifically for this conversation, what you're working on to encourage both issuers and investors.
Thanks, Grace. Maybe I'll start with the issuers. I think for the whole time we've been a project office, we've been approaching potential issuers. So functionally speaking, an exchange, the main job it's providing, or the main service is developing products, financial products that are suitable to the context of the country, whether it be equity trading, debt trading, listing and trading, and then services. So some of those services include mentioning the benefits of listing, mentioning the benefits of trading on an exchange, etc. So from day one, that's been a target of ours, both especially with the financial sector, but also other companies, other large companies, as well as smaller companies. We've been promoting listing, coming onto the exchange, finding a different avenue for raising capital besides the banking sector. As we all know, like access to finance is a big issue in Africa. I think even in Ethiopia, it's more acute, I would say, relatively speaking. So there's a big need for finance. So getting issuers to come sometimes seems very easy, but at the same time, I think educating awareness creation is a big part of our job. So as we've designed the exchange side, at least, we have a whole team that does listing and reporting. So their job really functionally is to promote listing onto the exchange, educate companies how to get ready for listing. So kind of like pre-IPO readiness. So we've taken different tracks on this. I think with the banks, I would say more of a targeted approach, given their relevance in the country and the fact that they're all share companies already. But also on the EIH, Dr. Brook was here earlier, we had a targeted program with a few of the SOEs there. So kind of pre-IPO readiness, focusing on legal, technical, financial. So it started all the way from the basics, what a capital market is, but also what they need to get ready. So a full study was done on 5 of the SOEs. And this is on the equity side. So we've done some of that work. In terms of readiness, also, we've collaborated with the CMA and universities. This includes both issuers and investors. So doing some community outreach work there, we will continue doing that. I think universities are a great avenue, especially in a vast country like Ethiopia, because there's local cultures everywhere, of course, and you have to find a way into those ecosystems. So it's a work in progress, I would say. Lastly, I think just to mention, I talked a lot about equity on the issuing side, but I know the IFC, you mentioned it earlier yourself, has a program going with potential issuers on the private sector side. So just like we have on the equity, we'll do the same on the debt market side. So we'll focus on debt listings on corporates to entice them to come list on the exchange, issue bonds. I think there's a big market for it, especially from the foreign investor side that's untapped. So we want to encourage potential banks who want to issue mortgages, large capex intensive businesses, manufacturing firms, etc., that can tap into the debt market. We're not just we're called the Securities Exchange for a reason. So that's kind of our focus, but it's a work in progress, I would say.
So thank you very much to our panelists. I would like to give our audience just a very brief opportunity to ask questions, maybe 2 questions, and then we'll wrap up as our time is almost up. I see a hand behind there.
Thank you. I guess I'd like the panel to comment a little bit more on the potential opportunities when it comes to institutional investors, and particularly pension funds and insurance companies. I think in Ethiopia, for now at least, we can forget insurance companies because they are too tiny. Total premiums is less than 0.3% of GDP. So it's going to take some time, and it's going to take some regulatory reform to fully exploit the opportunities within insurance. So let's look at pension funds. Huge infrastructure investments and different investment opportunities require mature pension funds. But what do we have in Ethiopia? A country with 123 million people. Formal employment, I can tell you, is not more than 3 million at most. That's less than definitely 3%.
Would you mind just giving the question so that we give opportunity
yes, I'm getting to it.
Respond.
I'm sorry.
Okay.
I know I'm going in circles, but I'm building up to it. You look at a country like Rwanda, for example. Years ago, they implemented a policy whereby the government rolled out pension to smallholder farmers. And Rwanda is a country with 13 million people. That's 1/10 of Ethiopia's population. We have 18 million smallholder farmers. So right there is an opportunity to grow pension funds 5 to 10x. But this requires significant help from the government, either through tax holidays, because without tax holidays this won't work, or joint contributions. And this is just farmers. So I would like the panel to comment on particularly growing this. It is possible. We have seen people have done it successfully. What is stopping us from doing it in Ethiopia? Thanks.
Thank you very much for that question. So before we respond, I just want to highlight that tomorrow we have a session specifically focused on institutional investors, and we have a couple of colleagues here who are going to, and speakers who will attend to that and get into more detail. And we are also very privileged to have Mr. Mark Davis, who has been involved in Rwanda with us to help develop the institutional investor base there. And I believe he will give a bit more detail because we've been quite engaged together with our World Bank colleagues. So what I want to suggest is maybe we pack the details of that question, especially the specific one for tomorrow. Yeah, but also just maybe briefly reiterate. I think, Leonard, you had said what the opportunities are for institutional investors, just very quickly, and then the detailed discussion we can have tomorrow during the investor-based session.
Thank you. So yes, size of the pension industry do matter, and even the insurance being your leading institutional investor base. But I think that the principle there is that the type of capital that these funds hold, it's long-term in nature, and what they are seeking is real returns. So they might not come in at a big scale, and tomorrow we will unpack how that could be improved. But this provides an opportunity for whatever exists today in that industry to catalyze regional pension funds to come to the market, or even your retail investor base. Thank you.
Thank you very much. We'll take just one last question, and then we can wrap it up. There's a question here. There's a lady at the second table.
Thank you. Good afternoon, all. Thank you so much, our panelists, for your insightful comments. I have actually two questions, sorry. So one, I wanted to address my question to Mr. David. What kind of insights can you potentially give to local investors in terms of unique regulatory challenges or incentives that they might potentially be faced when trying to enter into a capital market? And then one question to Mr. Michael. So Leonard kind of mentioned the need for awareness, capacity building, knowledge creation for investors to understand the capital market. What is ECX doing in terms of initiatives or strategies to try to educate, attract local investors on the capital market? Thank you.
Thank you, and thank you for that question. The incentive to the investors that we give, one, is from a product perspective. All the products that are traded by investors at the Securities Exchange are tax exempt. So that is a huge incentive to the investor, as it were. So you'll buy a share, that share has no tax. You will buy a bond, an infrastructure bond has no tax. So tax becomes a very, very good incentive in terms of investment. Two, we have also been able to make the product, you can actually securitize the products. You can be able to go to the Securities Exchange, buy a paper or a security, you take that security into a bank, you'll get a facility. And all those incentives ensure that the investors are able to take advantage of those products so that either they can securitize and they enhance their returns. Finally, the biggest incentive to the investors is ensuring that you have quality listings, quality issuers that will actually give these investors return in terms of capital gains or in terms of dividends, in terms of bonuses. So as exchanges and regulators, you have to be deliberate to ensure that the companies that you are bringing into the table are companies that are going to speak to that key element, because the biggest incentive, as I have said, to an investor is return. So the return comes by having those quality listings and also ensuring that those companies are giving the information at the right time so that there is no information asymmetry. So we ensure that anytime there is material information that an investor needs to have, it is distributed to the investor through the exchange within 24 hours of that information coming to the attention of the board. Thank you.
And to close us out, Michael, you can respond.
Thank you. It's probably the most relevant question. I think many others have commented how big, obviously the population of Ethiopia, the growth of the country, a lot of the economic fundamentals are very supportive for capital markets, in my view. But I think awareness creation capacity is really what we have to work on. I think all of us here, not just the exchange, not just the authority, the future intermediaries, brokers, and investment banks that come online, it will be a joint effort. But maybe just to answer your question, let me answer it in three ways. Firstly, I think we are creating an academy. So a lot of exchanges, I know the Nairobi Stock Exchange has one as well, but the ESX will have its own academy with both digital and physical learning. So there will be classroom lessons, all the way from basics, what are capital markets, etc., like I said earlier, to more advanced topics. So this will be kind of physical learning, but also a digital learning platform. We've actually procured everything. The content is being developed, but we'll hopefully launch this quite soon. So that's our academy. We'll have a specific training and certifications personnel in our team to help with this type of work. Secondly, workshops, seminars, like I said earlier, with colleges, universities around the country, partnering with them because they have more reach than us. We'll have programs on that. So that's just regular workshop seminars like we already do. Thirdly, on our mobile app, we'll have a mobile app where you can virtually trade. I believe learning is by doing, so people can actually download our app at some point once it's ready, and people can virtually trade shares. This is a very good way to learn about investments. You can track using paper money how much money you're making, losing, etc., and start getting interested in the market. It's more touch and feel, it's less theoretical, but you actually learn how to trade that way. So these are just some of the samples, just to answer your question, but I really want to say to the audience, it's an effort, I think, for the whole ecosystem, and that's why having these summits is really useful to share these thoughts, I think. I hope I've addressed your question.
Yeah, so thank you very much. I think we are coming to the end of our panel, and we hope that there's interest from those who are potential issuers here, at least to start considering capital markets as an avenue for raising long-term capital. We've talked about what the options could be. We also have started the discussion on investment and investors, what opportunities there are, and we do have a more detailed session tomorrow. And also we've heard what is being done so far. So we are not just talking, but there is some work that is going on. And so we want to close it out here because there are other discussions that are building up on this one, and specifically now on the other, avenues that we've started to talk about. So we'll close out. Please help me thank our distinguished panel, and for yourselves, for your attention and the questions. Thank you very much. And over back to Saron.
Thank you, Grace, and our panelists for that insightful discussion.